For more information on avoiding scams, please visit www.scamwatch.gov.au.
Business plans and cash flow projections are two of the most important requirements for a successful small business, but are often the most overlooked. Accountant Dina Ung joins us again to tell us more. Today I'm joined by Dina Ung, Principal Advisor from Tactics Accountants and Advisors. Thank you so much for joining us.
Thank you for having me.
And today we're talking business plans and cash flow. So Dina, what is a business plan and why would a small business owner put one together?
Okay, a business plan is like a roadmap of where the business owner wants to be in a few years' time. It allows the owner to think ahead and efficiently allocate resources and to prepare for problems. This stops the business owner, I guess, from getting lost or making losses, I guess, in the business.
So what should a small business owner put in their business plan?
You would put in a goal of where you want to be in over a time period, a mission statement, for example, to go via the most scenic route or even the shortest route. It should discuss the market or the demographics of what business you're in and contain budgets and cash flow forecasts to allow for costs.
Are there any templates available for someone to put together their own business plan?
Yep. The business.gov.au website has a lot of information available for small businesses, and that's helpful, and there's even a template for a business plan there. Or failing that, the BEC can provide you with a business plan as well as your accountant that will help with a business plan.
So how often should a business owner go back and review their business plan?
The business plan is quite an important document. Review it as regularly as you could, probably every 6 months, just to make sure that you're on track.
Okay. So what is cash flow?
Cash flow is the movement of money in and out of your business. It's sometimes referred to as working capital, and it's a cycle and usually calculated in a number of days for it to be recycled back to cash. For example, a business would have cash and it would purchase inputs to make its product, and that might take a month to produce, and then it would sit on the shelf for 30 days. And then get sold. So and then once it's sold, you'd have to wait for the money to come back in where the supplier's giving terms. So there might be quite a long period of 2 or 3 months before you get your money back, and so that cycle might be a 90-day cycle.
Okay. So how should a business measure cash flow? Should they prepare some sort of cash flow report?
Yes, they should, just to make sure that they've got enough cash flow. It's more important in a manufacturing business than say a service industry, because the cash is locked up in the products that it produces for quite a while. In a service industry, you generally it's just the personal exertion, and it might lock it up in wages. So you don't want to run out of cash before your money comes back in. If you know that you're going to run out of cash, you can seek alternative finance from a bank.
So what if a business wants to estimate how much cash flow they'll have for a future period, say for the next 12 months? How would they go about that?
Yep, you can do what's called a cash flow forecast to determine what the cash profit will be for the next 12 months. You do it on a monthly basis, and that helps you work out which months you're going to be short and make allowances for that.
Okay, so if a business does detect a shortage of cash flow, how can they go about addressing this?
Yep, they can cut back on a few things: discretionary spending, advertising. You take longer to pay creditors, and also encourage customers to pay quicker. You could seek external financing, like borrowing from family and friends, taking out debt financing. It's called selling your books. Borrow from an institution. A cash flow forecast can be used to show your lender that you have a viable business.
Okay, so what's the difference between cash flow and profit?
Yep. Cash flow and accounting profit vary slightly. There's things that are included in one that's not in the other. For example, if you sold a product that might not be included in cash flow straight away because cash hasn't been received. And other things like depreciation aren't a cash item, but the purchase of a item of plant and equipment it is a cash item, so that's included in the cash flow. And profit might not include the allocation of time. A profit might include the allocation of time, whereas the owner might not include it in the cash flow report.
Okay. So are cash flow and turnover the same thing?
No. Cash flow, or turnover generally refers to gross annual sales, and that's only one part of a cash flow cycle. The business can run out of cash flow during the production stage.
Okay.
Yeah.
So is it a good idea to have cash flow reports and projections in your business plan? And if so, would you review and update both the business plan and cash flows at the same time?
The two are linked. Your business plan determines your overall journey. The cash flow determines a small part of that journey for a specific time. If you change your cash flow, you might need to revisit your business plan to make sure that it's still reachable. You want to review both of those together, because if you change your cash flow, it might change your ability to attain your goal.
Excellent. Well, thank you for joining us, Dean. I really appreciate all your information on business plans and cash flow. I think it's certainly some very interesting information there.
Thank you very much.
How often would you recommend a business review its business plans and budgets?
Yep. In terms of an overall review, it depends a little bit on the category you're in. Some categories are more dynamic.
I think a business plan is something that lives.
Business plans should be reviewed every 3 months.
Quarterly?
I would seriously look at it once a year.
If you're in something like technology, well, you might need to do that once a week because of the dynamic nature of that industry.
And it needs to be reviewed almost at all times because circumstances change.
I'd say every 6 months.
As often as one can.
I'm close to a tax agent and an accountant, and they do everything for us.
Budgets every month.
Even as much as once a week.
Without fail, just do it.
Continually.
Because as soon as you start to lose it, you've lost it.
For more details on any of the stories from this episode, as well as access to a selection of free resources from Business Bites, including videos and podcasts, please visit businessbites.org.au.
The featured segments in Business Bites contain business advice of a general nature and do not take into account specific circumstances. To discuss your own specific business needs, please contact your local Business Enterprise Centre on 1300 132 232 or visit becnetwork.com. Thank you for watching Business Bites. See you again soon.